learned from the lesson. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then it feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, ladies and gentlemen, I got your watch list coming in at January 14th, 2022, and the stock market is freaking out. Today was a wild day. We started up really right near the highs of where we were after the bounce, but it quickly devolved into a very red day, and we saw what we saw last Friday where or that was last Wednesday, you got that huge downturn in the last hour or so. You don't really feel it here, but at one point we were only down about 1% or so on the NASDAQ, but ended up close to about 3%. So there's good and bad with all of this. Even the first thing I'll tell you, a delayed reaction from CPI, but Brainard and what you got with the Fed, they definitely had something to do with it. But now there is a lot of other things happening around the world with this dollar volatility as people are getting ready for what the Fed is going to do. We are still watching tech and a lot of things get clapped, but there is still some winners. So that's what I want to go over. We're going to go over what happened in the market today. I'm going to highlight all the plays. We still were able to make some plays, and actually I got two plays that I'm pretty hyped for. One's a macro play, and then one is a weekly catalyst. We're either going to get really lucky or not, but there's still opportunity out there. And like I said today on stream, if we keep seeing this volatility and you're watching these 2.5%, 3% down days, it sucks right now, but if we do get continued volatility, there may be some huge opportunities. And don't forget, you got bank earnings and the rest of earnings next week. So let us not delay. You guys know what you need to do. Drop your thumbs up on the video, man, if you find this helpful, and just big shout out to every single one of you guys showing love. And if you are new or relatively new, I'm telling you, stay in the game and do not be afraid to go slow. These markets are crazy. It's the first couple days of the year, but you still got a full year ahead of you, and these are the moments where a lot of opportunity can be created. So keep your chin up, baby. But as far as what we saw today, it was one part the Fed and Lael Brainard, and then the other part was the CPI digestion. This one was probably the easiest. Again, yesterday was a very big response at the open, and then we ended up with a very minimal or average response. So to see a big move the day after, I'm going to put this one up to digestion. But like I was saying during the stream, I didn't quite catch it, but when I was going through the background, it just seemed like Lael had to cause something, and I think she did. And part of it was her saying that they can raise rates as soon as asset purchases are terminated, but that is going to happen in March. So in a weird way, Lael answered the March question that Powell wouldn't answer. So if you remember the watch list from a couple of days ago, we broke down how it was working, where they're saying, okay, here is March when we're going to end assets. Powell wouldn't say March, and then he said we will start the tapering or the balance sheet reduction in 2022. But now after Brainard's speech, she did kind of make an allusion towards it. And then on top of that, we also got to hear from Fed Evans and Fed Harker, and they said that they see 3 to 4 rate hikes this year. So a lot more hawkish stuff, and really it kind of shows how in agreement but different the Fed is. It seems like we're getting a lot of hawkish comments, but yesterday Dolly was a little bit weird, but they're all saying this 3 to 4 rate hikes, but they're leaving the window open, and it may be some of these other factors going on. So we'll talk about that. But as far as what you got today, I think it was CPI digestion and the Fed, and even coming into tomorrow, that will probably be the most important thing. Now, coming into your first pretty picture here, this one is quite surprising, and it shows you where we are at in terms of the era, but tech is losing its edge and is now lagging behind the market almost quarter after quarter. So what this chart is showing you is the profit growth of tech companies versus the S&P 500, and you can see for the last 4 quarters or so, it's been declining around 2018, 2019. This was middle of the way of balance sheet reduction. You kind of saw the same thing in then 2012 and 2014, but it's highlighting what we're seeing right now with tech really being the downside leader. And even today, the Dow was up and held a lot of strength until we got that real big flush out towards the end. So the real big moves happening right now, it is tech, and this is where a lot of the opportunities or a lot of the death has actually occurred. So keep this in mind and understand here with this earnings season, tech is going to be very, very important. Now, coming into tomorrow, like I said, it will be important to watch the Fed, and if we get any more inflation stuff. You got PPI data today, and it was actually better than expected. It showed that inflation may be peaking again after this report. Now, this is the new narrative. It doesn't mean it's going to happen, but some people are discussing inflation fading away. So we are getting data tomorrow. It shouldn't affect too much. You will be getting retail sales and consumer sentiment, but now the overall digestion of all of this volatility and the fact that the volatility still remains, that will be key. And then whether or not we get this red close and get another one of these down Friday, down Monday setups, or as it brings us into next week. So that is definitely going to say a lot. And if we close below some of the key levels that we've traded at or some of the lows on the recent weeks. So that's the first thing. But then on top of it, we got a little bit of it today, and this is going to relate to that macro play that I have. But China and Russia, those situations are kind of brewing beneath the surface. So not important to react just yet, but maybe as we get towards earnings or afterwards, that will be the key. And just don't forget the FOMC meeting here is coming in about 2 weeks. So coming into the company news and events now, very straightforward, not too much. Again, it wasn't even really too active of a news day. And then coming into tomorrow, it's going to be a lot about earnings, especially next week too. But the first piece of news, the Supreme Court has blocked Biden's shot or test rule for workers. This was going to affect about 80 million workers, saying that they had to get vaccinated or tested regularly. The Supreme Court said OSHA does not have the ability to determine public health, and they ruled that as out of the bounds of the government to be able to enforce that, but they did keep it on anybody or like the healthcare companies or the Medicare, Medicaid receivers, like the nursing homes and all of that. But that was a big piece of news, kind of bullish there for the economy. So we'll see how that plays out into some of the jobs report. And then Block, Square, Jack Dorsey has now confirmed the plans for the Bitcoin mining system. So remember, we got that earlier in the week. We made a flip on it. Square came down, but I will be watching this tomorrow and even seeing if it has an effect on crypto. And then coming into earnings, SAP, and this is very big for technology. They had their earnings and they actually did good. Their cloud sales jumped 28% and they beat all analyst estimates. So the stock was able to recover the loss after hours because of the move. So we'll see how that plays out tomorrow. And then finally, China is shutting down more ports because of their zero COVID strategy. Again, the city of Tianjin, it has been getting clapped or they've been closing it down. And now a lot of the ports that you saw closed last year, they're doing it again. And they actually have more ships waiting to dock in China than the U.S. So you know how we are always taking pictures and free. They can't take pictures, but they're tripping out over there. It's the same exact thing. And then China has also set the currency fix to the weakest they have in a month. And this ties into that macro play in the Chinese yuan, which is on a strengthening tear, and it is not good. But our work is cut out for us. We got some things lingering beneath the surface. We got some stuff that we got to address now. You got earnings, you got premiums moving. So it's going to be exciting, and I hope you got the helmet on. But that is pretty much it. So let us get into the plays. So right off the bat, I got three or four different stocks that I'm looking at coming into tomorrow. One of them I really like as a macro play, but I do need some confirmation. The other one is a gamble, and then the last one is going to be a post-earnings move. But let's start with the gamble, baby. Roblox, it got absolutely clapped today, down about 9%. So that's part of it. I mean, the premiums got destroyed. Remember, I wanted to double dip on the puts. I really should have. I waited a little too long, missed that opportunity, but now the calls are really cheap and we are getting close to a catalyst. So this one is not for sure, but usually on the second week of the month, they release their monthly user report. Pretty much it's like their guidance and the activity on the platform. So I'm thinking that that could be good. Essentially, it could be bearish, but I am going to be betting on Santa Claus here that it was good, but that should come in either tomorrow or now on Tuesday. I put Monday, but the market is going to be closed on Monday. So as far as the play, I decided to go with a next week. Again, I'm trying to play the catalyst and I wanted to get as close to the money as I can with a massive amount of quantity. So I grabbed the 100 calls for next week. I bought them for 17 cents. They pretty much held the same value there. We got it towards the close, so it was already at the bottom of 9%. So we're going to see what happens. But again, this is a very risky trade. Do not trade this, okay? You got to just watch and see what happens. I'm fully ready and prepared. But that is the first one. The second one, Wells Fargo and Citi. So this is going to be a post-earnings trade, but keep in mind what you saw today. We did have post-earnings moves. I did make plays on both of them, and we hit them, but we had to space it out a little bit, and I'll show you what I'm talking about. But I like Wells Fargo. It's moved a lot. I did end up holding the put. So if you remember that pre-earnings play, I went for the put after we flipped some of the upside there on the banks. The put was down 50%. So I said, hey, instead of taking the loss, I'm just going to ride it out because it's not at one of those positions. Essentially, it got clapped and there was no earnings run-up premium on the puts. On the calls, yes, but not the puts. So still holding that. We'll see where it's at tomorrow. I did sell out of the JP Morgans for like 2 cents more than what I paid, a small 5% gain, and that was because we waited till under the day. It didn't move. They were up like 18% at one point, but I didn't take it. But I did hold Wells Fargo, and now I also held Citi, and I like Citi because I bought it for other reasons there with the bank. So we're going to have plays on that tomorrow. Depending on the earnings, there will be opportunities at the very least. People are still willing to trade earnings in this environment, so let's take advantage of it. But that's the second play. And then finally, the macro BABA play, baby. So this one, I still need some confirmation, but we did get some news after hours that I liked, and it was China weakening their currency or doing that little temporary fix. It's not a real weakening, but it's a sign of it, and it highlights the whole point. China does not want a strong currency, and if you've watched the Chinese yuan over the year, it literally tracks growth stocks as well as all of the China stocks and their bounce. So here is the Chinese yuan, and this is a 1-year chart. I mean, and just tell me this does not look like Alibaba. Even if we pull it up, I mean, you could take it to like a 2-year chart as well, but it looks very, very similar to Alibaba and also a lot of growth names. So we've talked about this. If you guys have been listening on stream, if you've been following along, you might understand this. This is a really big indicator, but the fact that recently now it has bounced up and you saw that big bounce with the China stocks, it has already came back, but not all of the names have. So I'm taking this as an opportunity, and if the market still gets a little bit red here, I think I could get more put protection. If you remember that Amazon play yesterday, that's exactly what we were able to do. So I really like this play, and I'm pretty much hoping that BABA plays out like the yuan. Again, now, here is the 1-year chart on the yuan. It looks very, very similar, and if we pull it in now to the 100-day, you can see what I'm talking about. There was that bounce on the yuan, but now the yuan has came all the way back down here. So after a really epic rally in China stocks, if that gives up, I think it could be decent, but BABA, it is risky, and the play that I bought, the premiums were up 30% today, but they are down about 60 or 70% from the last week or so. So kind of put me in the middle there. But as far as the play, I decided to go with the BABA 100 put for February. So not too much time, but not anything too crazy. I don't know if it covers earnings or not, but my idea with this one, it will probably be a quicker flip if we get any of this recent volatility, or especially if there is a big divergence between the China stocks and the yuan. So that was the logic with these plays. I bought these at 103. They closed up about like 6-8%. We got them right before the market closed, so not too bad. But that is the third play. Macro related, it is going to be tricky, but we will see what happens. As far as everything else, we did make a lot of other plays today. So I started this morning right here with Altria. They were leading. We brought this one up on the watch list as well yesterday. And if you've been watching pretty much every week, I mean, it's just taking advantage of the premiums on these weekly contracts. I mean, we've done this actually several times on the weekly, as you guys can see. We're still holding the leaps, but we did it in December. We bought the weeklies. They would go up about 50%. We'd flip them, then we'd wait a couple days. They'd come back into the price. We'd buy a different set of them, then we'd flip out of them, and then we'd wait another week, get the weekly as this had been having this value rotation, sell out for 50%, and then, well, we were able to do it again today. So I bought 100 of the January 52 calls, 5 cents. They were cheaper than they've been. They went up about 50%, so we sold out of those. That was the first play this morning, and then the Ford, this one was from last week, and we were down 50% on these ones. They came back to life, was able to sell out at 50%. I said, give me my money, I'll walk away. Ford's a killer, still holding the shares. And then KBH, I don't know, wait, I think I made one earlier. I guess the first trade was KBH right here. I don't think you see it because look, it's a lot of trades. It's not going down there. It's not letting me scroll, but I made one in the morning. This was a post-earnings run-up, and the option chain really just didn't update. It said I got them at the same price, but nobody really traded that contract. But KB Homes beat, and they were up like 10%. I really liked it just because it's real estate also. So they had good guidance. They did very good. Real estate got kind of clapped, but in this environment, environment, a real estate company would do good, especially after good guidance. So I grabbed the February 55s for 25 cents, but I ended up flipping them out almost 100% by the end of the day there. But right before I did that, I grabbed 100 of the 2-week or the next week calls for 55. It's a really big difference. My goal is to probably flip these if it keeps continuing. Again, KB Home still held up, so holding that play, took some of those profits, and then I grabbed a January 16 UNG for 17 cents, a little bit bigger. This one's also risky, but I'm pretty much playing the cold weather and what we saw, and this is kind of common. It's just like oil. You get a really crazy pop off the top. It might come back a little bit, but if some of the same trends persist, you might get another one of the pops here. So that's pretty much what I'm playing short term, and depending on how the weather and other stuff overseas goes, it could have some effect, but UNG is primarily going to get affected by what's going on domestically here. Then we sold out of the JP Morgan plays at 52 cents. Pre-earnings, we got a little bit of gain, but it just really wasn't there. And then we also made 2 different other plays. I did them on the Robinhood account. They don't show the trade history the same way, but you remember this Amazon for yesterday, the 30-20. We bought these at 3,700. It's saying it closed at 58 or about like 53 on the bid. I sold out around like $47, so got like a 1,300 or 40% profit on there. Not too bad. I am fully clapped on the other Netflixes and the Microsoft. They're down like 60, 70. Even the Amazon's down like 30% right now at this point, but this paid for the other one, and now some people are asking me when I'm going to average on the other ones. I'm just going to wait about a day or two before earnings if the market just stays choppy like this and there's no real earnings move kind of coming to light, or there's just so much volatility where it wipes it away. But hopefully you're seeing we're still able to get some of these opportunities, and along the way there is a lot of plays that we're making, and I know you guys will see the account, and hopefully you're just following along with everything that we're talking about here, because you will see a lot of these plays and you're seeing what I'm holding. These are the ones that are holding and that we really haven't been able to do anything with, but if you're noticing day after day, all of these plays, these are just another 1,000 realized in profit, then we're taking profits on there. So the idea is get some time, but make sure that you're taking some of the profits along the way. If you're going to be holding stuff, you don't want to hold everything and never take profits, because then it really starts to add up, but you could kind of balance it out, and hopefully you see what I'm doing as we get into earnings. But there was that play, and then we also flipped out of the TSMs as well, and this was now the post-earnings continuation, but this is what I want you guys to see, because in the morning, all of the plays were up. The stock even was up, I think, like 10% at one point, even after dropping, you see the 5%, but what ended up happening here, I wanted to get you the exact play on there. Again, it just shows my personal information on the history thing, but here it is on the Robinhood. We grabbed the TSM January 21st. I grabbed 3 of the 148 calls for 60 cents, and then I sold them out at about $1.06. So this was another 80% play here on the day, but I want you to see what we're working with on here. Even then, the premium still kind of held up, but the idea was post-earnings, look at the premium. In the morning, these were going for like 50, 60 cents, right? What ended up happening by morning, they were going for $1.20. Even in the first 5-10 minutes, if you wanted to bid on them, I mean, you were paying an arm and a leg for them. And then as the stock went down, I had to wait over an hour for it. Again, we were just keeping our eyes on it. You see what happened as the stock started to plummet with the market. They came back to the same price, and this is now probably some of the best. I mean, TSM had good earnings, had a good report, good guidance. I mean, the stock was up 10%, but now when it moved and then the volatility and everything else, it literally brought the contract back to yesterday's price. But today, you know what happened with the earnings. So that's where we scooped it up there at 60, kept it small, but still produced a nice gain out there. And then we flipped out, and then another post-earnings continuation. So those are the main plays as far as everything else. Going to be watching natural gas. We'll see Amazon. If I can double dip, we'll see. I mean, I think it might have to test the 3,200. We'll see what happens with that, but I'm expecting a lot of volatility with everything still. Again, that has not disappeared. Watch KBH. They closed up 15% and they are holding, but again, just with this industry, home builders, everything, it will be good. The Januaries will be tough, but even take a look at the volume here and everything. This is one of their biggest amounts of volume in years. So if it does start to get above the 50, it could lead to a breakout. I'm still holding those shorter term plays. Then Ford, really like, pretty much I'll double dip if it comes back down. You've seen it just like Altria. We've played it very, very similar. And then same thing with Altria. If it keeps holding some of this market dominance and gets up there, we might be able to make another flip, but we don't have to force force it, then JP Morgan. Going to watch the post-earnings continuation there. I think all the banks will be active. And then Roblo, that's the gamble play. Baba, you could even watch some of the China stocks like JD as well too, but the premiums on here weren't too bad. That's why I decided to go with it. Uber still got that put for earnings. It is still down, but it came back up a little bit. So going to be keeping my eye out for this, especially as we get closer to earnings and if we get volatility. This one has held up very, very good. So it's either going to continue to exhibit strength, or if it does flush out before earnings, that could say something, but watch out for them. And then TSM, still going to be watching as a follow-on earnings play. That one's not out the books yet. Citi, I don't really care what happens on the earnings, but I will be watching it. Like I said, I played it for different reasons, but really like it. And then Wells Fargo, this one should move big with everything we got, but just be careful for the premiums in the morning, considering there has been a lot of movement. And then finally, TLT and the dollar. I really think the dollar is the big indicator. It went lower today. You'll see what happens tomorrow, or when we bounce. I mean, if somebody asked today, they're like, how do we know the correlation is there? You can't really predict it. It's just all about once it happens and it's there, you respond earlier than everybody else pretty much. I wouldn't want to predict it because there could be a lot of volatility and false signals in there, but dollar is definitely important. Everybody, or at least in the analyst community and macro community, they are talking about it, and it is very, very key. And as we relate it to China and all that, that's the thing. We are going to get a couple things before the Fed with bonds. Watch for the velocity to keep kind of doing this, but there might be another play on TLT here soon. But realistically, I think it's the dollar and finding that correlation. And if we really notice that it's sticking and the market's going to go down with the dollar, then we'll be able to make our plays. But if the dollar does drop and you see the market get strength, it might be risk on moment. So it could go both ways. But what I'm trying to tell you, there is massive volatility still lurking, and we're probably going to see a lot more. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure Hydrate Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shine. I need you to remember. Are you willing to accept discipline, baby? But the code loves you. I love you. I'm going to see you in the morning. Let's go.